All right, guys. So this video is an introduction and really a full summary of everything that I believe that has happened with the GameStop AMC saga revolution thing that I like to call it. And basically the best way I feel like I could play it. And it's like the maximum safety, but also the maximum reward situation. If you think GME and AMC are the only stocks worth investing like I do, I personally believe I have mathematically proven the best way to play it. And so over this course of this video, you're going to learn why the stocks are strong, what is pushing the stocks up, what are other people saying about it, celebrities, media, news, all the other stuff that I've put together that basically gives me the conviction that I have to be live streaming 8 to 12 hours a day, every day, telling people, spreading the word that this is the way. And so with no further ado, we will get started. And so I made a little bullet point list because I wanted to make sure I covered everything. And I probably still missed some things in here, but we'll go ahead and start with this. So just to give you guys an idea of where I come from, when I was 23 years old, I got a life license and I got the access to insurance companies software called for a product called Index Universal Life. And basically I could change a million different things, and whatever I changed the retirement plan for the customer that I was serving. And they had a thing called a variable loan where basically you can borrow money but still make money on your money. So I was like, well, what if I borrow it and I put it back in the policy? And ultimately through all that study, I found out a way where you can basically with like if you do like a Monte Carlo, which is like a 10,000 different possibility simulator with a set of limits of all the things that you think are like the maximum or best or worst case scenarios, basically 96% of the scenarios, the retirement projection income was 4 to 8 times higher than what the average insurance agent today is selling to the average sold client. And so, like, I felt like I had $1 billion idea. I felt like I was about to take over the world, and just nobody liked it. Everybody hated it. Everybody said, this is old news. Like, everyone knows about this, and nobody knew about it. Nobody, like, they all just want to just like shut me up. And so, ultimately, my brother's having huge success with it. He's the #1 IUL salesman in the whole country right now. So, I was clearly right about something or a lot of things. Because I couldn't really get that off the ground myself, I started a roofing company because I had a lot of door-to-door. I had probably 4 or 5 years of door-to-door sales experience, maybe 1 year of roofing storm sales experience. And then so I went and became a roofing storm chasing business owner with my younger brother. Then I sold out of that, went into stocks and options, really just options, about 2 years ago. I lost 500K for the last 18 months. I've basically put myself on house arrest to master options. And I had this huge plan. And basically, I did master options. And I've shared on my other videos on my live stream some of, like, basically, I had this strategy where you can you can cross margin and buy and sell options on the SPY and the SPX at the same strike price. And because they close at different prices, you can basically guarantee a profit. And you can analyze how the price is going to close next to each other. And you can create a credit spread opportunity where no matter where the price goes, the credit spread is always going to collect the credit. And you never really have any risk, or at least you've modified the risk of a standard credit spread. And so I felt like it was going to make me $1 billion. I've spent hundreds of thousands of dollars on just the development and research of this, buying data of option data and saving it all, fragment, like second by second, tick by tick change, and then like creating different like UI systems. And I'll go over that stuff later. But basically, I have a wealth of stock option knowledge. Like, it's one thing if somebody has 10 years of learning about stock options 1 hour a day, but if you learn about stock options 12 hours a day for a year and a half every day in a row, that's how you master something. And that's why, like, basically the education that I have on options is something that I learned, and it's something that I know for myself, and it's not something that anyone else taught me or that I paid for. And so, like, when I teach it to you, like, it's not something that you can really go validate in the rest of the world. It's just, so far, to a lot of people, it's made so much sense, and it looks so accurate on the numbers that they've seen enough to believe, I guess. And so, yeah, I spent that 2 years studying, and ultimately I thought I was going to be like, I thought I was going to have to go start another roofing company, like make 200 grand a year and just keep throwing it into my SPY, SPX credit strategy. And I was going to make $1 billion. And then literally I had the plan where I was going to go throw $10 million into a stock that had the cheapest options because I know how much they can profit. And then I was going to gun that stock with $100 million of my $1 billion that I profited. And I was literally going to drain $1 trillion from, now we know the name, Citadel. But all of this stuff happened like as I'm in that groove, as I'm on that mission, as I've been chasing this for a long, long time now. I freaking get a break from roofing and I look down at I'm just on my phone and I'm looking at the stocks and I'm see the GME on Wednesday, January 26th pops 150%. And then I see on January 27th, it pops another 250%. And I see AMC pops 150% and had like $700 million of volume that day. And then I see the market get halted. I see they allow selling only. They crash the market. I know that they just got back probably $100 billion in their options. And then like the second that happened, I knew I had to be in this. The second it was halted, because I know that they don't halt stocks and they go up. When Volkswagen went from $100 to $1,000, they didn't halt the stock for it to crash. It just went to a top and then the people sold and it crashed. And so as long as we diamond hold, the price will keep going up. But sorry, I'm reading something real quick. Oh, okay. So as long as we don't sell during the squeeze, it's going to keep going up. But I got a whole plan for that. So that's something that we'll talk about in a little bit. And so, yeah, like when I saw this whole thing happening, basically I didn't have enough money. I've already exhausted all of the resources I had at this point. And so February 1st, my sister sends me $100,000 because I called her and I told her our family has to be invested in this. This is it. And my brother is part of that 100,000 as well. So I invest in 7 different stocks on this $100,000, and GME and AMC was part of it. And then the next 2 weeks, we just get murdered. I mean, just absolutely every stock I invested in went down a little bit at least, but GME went down 90% for that 2 weeks. AMC went down like 70% for that 2 weeks. And ultimately, as that happened, I sold out of my other 5 stocks and I put all of it, I averaged down in GME and AMC. And at one point I had, at the lowest point, I had 1,000 GME for like $55 a piece. And then I had 10,000 AMC at 7, probably 20 a piece or something. And so originally I got an AMC at $13 and GME at like $195 after it dropped from $483. And so like I basically bought at the worst times, but like averaging down solved all that problems. But when I averaged down, I saved a little bit left over because like I've been studying options for the longest time. And I just had this conviction in my heart that if the government's going to suppress it, then every time somebody suppresses something, there's an equal and opposite reaction from that. And so it's got to pop again. And so when I saw that 150 and that 250% jump, I'm like, if that happens again, I make a fortune. I know it. And so I'm betting in the right spots. And on February 24th and 25th, I have $60,000 in my bank account. 10,000 of it's in options on AMC and GME. And on February 24th, GME at 3:50 Eastern time popped up from 30% positive to 100% positive. And my account basically at 1:50 Eastern time, when it went up to 100, it went to $96. So it was at $50 a share. It went to $96 a share at the very close of the market. And they halted it 10 minutes early and they didn't open up until extra hours on the after hours. And so they didn't they closed GME 10 minutes before every other stock because it exploded to 100% positive and they couldn't stop it. And it's going to happen again. I know it's going to happen again. I just don't know when. And it's going to happen to AMC too, though. But I also know that. And so let me explain why I know that as well. But ultimately, let me make sure I'm still on the right track. So the February 20th, so let me show you my Reddit post. It's not a very good post, and I plan to repost this. I have a better version of it written up. But basically, if you look at the GME and AMC charts, there are so many massive swings that they moved at the exact same time that I know they are connected. I believe that the Fed, with their quantitative easing, has intentionally sent these prices different directions on different days, just to make it look like they're not perfectly connected, so that people would forget about AMC. I truly feel that way, and I feel that way because of the option pricing. Right now, the GME option pricing is anywhere from 100 to 10 times larger than what it used to be when I first bought in and I turned $10,000 into $1 million. And AMC's option prices are cheaper than when I turned the $10,000 into $1 million. Okay, so that chart right there is just kind of that proof. But if we look at this right here, this was February 24th. The stock price was at 49.70 with a 10% increase. And then this was the middle of the day of the next day where the market crashed. GME opened up another 77% up to 162. And my account balance grew from 73,000 at this point all the way to $1.2 million. Okay. I cashed out how much? Only like 700,000. So I cashed out one thing and then another thing, but this one was the big one that I cashed out, which is right here. So this was my single best trade. Basically, I just showed you when I placed this trade, the stock for GME was at $50 a share, okay? So if it's at $50 a share, that means the at the money strike is $50. Well, this strike that I bought was at $100 strike, and I bought 120 contracts, okay? So this was 100% out of the money. So if $50 grew 100%, it'd be at $100, then that would put this at the money. So this was 100% out of the money. And when basically, remember what I told you. So if you go back and you look at the close on February 24th of GME, you'll see that the close was $96. Well, if you go back and you look at my YouTube videos on February 24th and 25th, I posted a video of my $500,000 account, and I looked at the option where it showed that this option was worth $200,000 at the money. So check this out. When I bought this 100% out of the money, it was 26 cents per contract, or $26 for one contract after you do the 100 times multiplier. So at the money though, so this was 26 cents at 100% out of the money. At the money, it was $1. So if it was $1 at the money, but then when this becomes at the money, it's now $18. Basically, your at the money cost had an 18 times multiplying effect on the value of the contract. But 18 times effect doesn't account for what's going on here. So how do you explain the rest of it? Well, let me show you. So if I go to AMC options right now, basically I can come to, let's just go to an early to expire expiration. So this is Thursdays to expire expiration. Right now the stock price is at 10.35. So let's just go to $20. Right now, it only costs $3 for a contract. So in the same situation on GME, where I paid $26 a contract, it's only $3 for one contract. That's how much cheaper the AMC options are compared to when the GME options were when I bought them. And when I cashed that $3,000 out for that 120 contracts, I cashed it out for $500,000. So my $3,000 grew by 160x. Okay. And AMC is cheaper than that. But check this out. So this is what's really important. So I just showed you how the at the money value works, and I just showed you how that works. But check this out. So the at the money value for the AMC right now for the same expiration is 1050 is $48 per contract. So I just told you is $3 per contract. This is $48. That's a 16x difference. So I know just from every strike outside of the money is just a fraction of the at the money extrinsic value. The at the money extrinsic value is the total extrinsic value for that much theta on that specific expiration. Everything below that is a fraction. You're basically getting odds on your money to bet a value of a fraction of the extrinsic value. So basically, I know that when this AMC goes from $10 to $20, my $3 is going to go to $48 just in a natural linear progression. But then when I look at the extrinsic value of the out of the money theta, and I can see that the $1 at the money price is now $18 at the money price, there's another 18 times multiplier on that. So if you bought this option and it popped up 100% tomorrow on AMC, you could realistically expect a 16x times, what was the other thing that I just said? An 18x. Because it was $1 at the money, then it turned into $18 at the money when the 100% out of the money got to at the money. And so it went from $1 to $18 as at the money extrinsic value. GodPill, how can I help you?
Yo, Marcus.
What up?
Hey, I've been following your show since the beginning. I didn't see your show on today. I couldn't connect. Is something going on, or what happened? You know?
Go to the description on it and on any of those videos and follow the Discord. I'm live on Discord right now because I got banned from YouTube for 7 days. I was watching another YouTuber stream and they said I was watching too long, that it was a copyright issue.
Friggin' people, man, always find a way out.
Yeah.
So you're on. What do you're on a website? What do you
It's
on?
It's called Discord. You can do it from your computer or your phone.
Discord.
Just look on the description of the YouTube live shows on YouTube. Go to any of the old ones. I changed all the, like there's a link in there to Discord. Just click on that and you can show up.
Perfect. You're the man.
All right, later, brother.
Cool, guys.
Sorry about that, guys. Technical difficulties. So we got the 16x from the linear regression of just like you're no longer, you're now at the money. You're no longer just a fraction of at the money. And then you got the 18x from the volatility scale. So basically that $1 at the money to the $18 at the money is all based off historical stock movement. And basically the AMC historical stock movement is saying that $40 is impossible, even though we know that it's not, based off what GME has already done. And let me go into more of that a little bit later. Hang on. So basically, if you bought in, like I made 160x on my GME. Well, if I did it on the AMC, I'd expect to make a 288x roughly if that same scenario just happened. But guess what? Guess what? We're not investing on the $20 strike or the $29 strike. Instead, if you go out to June, you'll see that there's a $40 strike. Okay, but guess what? I'm not investing in this one either. What I want to do is I want to show you something here. So I just showed you a lot about how it works at the money, but now let me show you something about how it works with equivalent strikes all the way going back. So check this out. If you have a $40 strike right here at June, this $40 strike has 90 days of theta. If there was an option that expired on Thursday that has 3 days of theta and it had a $40 strike, because this is 30 times as much theta, I would expect the value of the contract to be somewhere in the ballpark of 30 times. Now, it could be 10 times, it could be 50 times. It all, like I've seen it different ways on all the options. And so it all depends on how the pricing goes. But basically, because it has like a scale that it's going to fall into, I know that they're all going to be reasonably the same profitable amount. So instead of betting on the June one, which is the furthest out of the money, which we know is best because we want to collect the extrinsic theta, like I cash out my options once they get to at the money, and then I'm going to gun the common stock. But I'll go over that later as well. So basically, what I want to show you is if I go from June $40 strike to September, we go from $55 a contract to $97 a contract. Okay. By adding on 3 more months of theta, we literally just doubled the value of the contract. Well, check this out. Instead of 3 months, we go to like 18 months. So we got 6 times as much theta. We go from $50 to $240. So now I look at this and it actually looks like I'm getting a discount. Instead of 6x of theta, I'm only paying 5 times the price, but I got 6x the amount till it expires. So 100% of my AMC money is on January 2023 $40 strike, and I have 374 of these contracts for a total of $89,760. I've lost $28,000 since I bought these, but that's only because the market's a crash. It's not the theta. In the theta today, the market only went 1% for GME and AMC, and I got another $18,000 on GME. One's lost $30,000, one's lost $2,000. And I got, $25,000 on GME, one for April 16th, 2021, $800 strikes, and then 5 contracts for January 2023, $950 strikes. Now, if I get any more money, the only 2 places I'll ever put money is GME January 2023, 950, or AMC January 2023, 40. But basically what I'm hoping right now is that GME pops before April 16th. I'm going to cash out these 32 contracts that I have on the $800 strike, and I'm going to put them all into the January 2023 $40 strike. And then I'm going to hold these until they hit at the money. So basically, once January 2023 $40 AMC strike hits at the money, I'm going to cash out 90% of them. And I'll go into what I'm going to do with the 90% and the 10% later. I still got to cover why AMC is a great bet, why GME is a great bet, the story behind them, all that good stuff. So hang on, let me check the comments, make sure I'm not missing nothing. Mario just slid into the server. Welcome, welcome. No, always learning. You're wrong. Always learning. Stop saying stuff in the chat if you're not going to be right, bro. Like, that's just embarrassing. Look, if I go to add option, I bought that $26 option right before, like 3 days before it expired, like literally Tuesday. And then it got paid on Wednesday. So this is the same to expiration. This literally has the same amount of theta. So 100% out of the money from 1050 would be $21. $21 is $3 a contract. It's 0.03 limit price, which is a spend amount of $3, which is 800% cheaper than the GME option I bought 100% out of the money that had 3 days to expire. So instead of making 160x, I already showed you the math, and you make 288x. Bro, you're talking about the 2-year theta. Bro, you're confusing 2 conversations now. Bro, get out of here. You're clearly jumping in and out and you're not watching, so shut your mouth. Gosh, that bothers me. Like, you guys, like, you're going to freaking hit my distraction index and I'm going to lose my train of thought and not be able to keep going. Obviously, when I told you that the AMC option's cheaper, you guys understand that I mean the AMC option that expires in 3 days, not the one that expires in 2 years. I explained the one that expires in 2 years is cheaper in a relation when you look at every strike from every from the same strike, but every different expiration day, you always have a larger value because there's more theta. And so I don't know, like, your whole conversation just doesn't even make sense why you would say any of that in the chat. Like, you're just confusing people and it deserves to be kicked from the chat. It really does. Like, if I didn't love you always learning, I would be freaking pissed at you right now. Oh, yeah. We don't accept shills in the chat. So, WardenElite, if I ever see somebody in my chat that's like saying, when do we sell? Or do I sell at 20? Or do I sell at 30? And it just sounds like somebody that's coming in to like cause problems, like not on the page, not willing to listen, not actually hearing what I have to say. We just boot them. We don't, like, anybody wants to argue with me. Like, I'm not here to argue. I'm here to share my information. If you guys want it, you can have it. Help me, like, make money with me. Help me finish the MOAS, all the great things. Let's do it. I want to be a part of that. But like, I just can't accept shills in the chat. I can't accept negative energy. Like, I feel like I got the best facts and research out there and I want people to be on board. But again, like, I just can't handle the negative energy. So let's keep going. Now, to understand this next part, let's go ahead and watch. Like, I don't even want to watch the video. I'm going to show you guys the video so you can Google it yourself. But if I Google Mark Cuban, if I Google Mark Cuban and then CNBC, let's go. Come on. CNBC. There is a video that we just watched earlier today, and it is right here. And basically, if you watch this video right here, Mark Cuban says what's happening in GME and AMC is nothing new. And this is all about buying pressure. And this is all about, like, a short squeeze has happened 20 times in the past and it's going to happen in the future. And the way that a stock or any other value of currency is based off how many and how much people buy. How many people are buying and how much do they buy? And those are the only two factors that matter that generate the growth in a stock. That's why a stock can be worth like, hold on, we'll get to that part later. But so this is a good video to watch, but I just want you guys to understand, like, there are real people out there saying what every little piece that I say about anything, you can find somebody that is well qualified and well credentialed to support at least one piece of what I say. Like the big picture, all my little pieces are accurate. So if you put it together, like the big picture is accurate as well. Ultimately, let's see. What was I going to show you guys next? So I want to show you, oh yeah, let's go over volume. So what we're going to say is AMC, bar chart, technical analysis. And then we're going to come here. We got the AMC. So you'll find the same volume that you find on this website. It's the same volume on E-Trade. It's the same volume on all the platforms. So I just want to come here so people can see it if they don't have a trading platform already, because right after this part, I am going to go into how to start an account. And then, well, actually, let me do that real quick right now. So if you guys are watching this video for educational purposes, if a friend sent this to you and said you have to watch this video, basically in order to participate with us, the only things that you will need is a stock account from a brokerage. It could be E-Trade, Fidelity, TD Ameritrade. It can be Robinhood, but most people don't like them. And who else? I think that's like, it can be Webull, but I heard they're about China, so let's not go them either. So let's just say those five though. Any of those five work, and you just got to have an options level 2 account and upgrade the account to an options level 2. If you don't have an account, start an account just by going to etrade.com, sign up, and then wire yourself however much money you want to invest. Whatever you buy per contract in an option, when we're buying options, if it's $230 per contract, you can never lose more than that $230 if you only buy one contract. So I'm telling you that one contract, the $230, is going to be worth anywhere from $20,000 to $100,000 a piece. And when AMC hits $40. And so check this out. First, let's see why AMC is going to hit $40. Actually, because I already went over the options, I want to hit this one thing first because I don't want to go over options too much more. So let's take a look. Like GME is about 400% ROI ahead, maybe 300% ROI ahead of AMC if you look at both of their bottoms. So like GME hit a bottom of $5. Actually, so I'm probably not even right about that. I'm probably way under on that. So GME hit a bottom of $5. AMC hit a bottom of $1.80, right? So GME is at $200 right now. So what's that? How many X's? That is 40X. So GME is 40X from its absolute bottom of COVID, while AMC has only hit a bottom of $1.80, and since it's at $10 right now, that's literally like 6 or 7x. So basically, GME is 700% more growth than AMC from their bottoms. Okay, so let's remember that. So what I want you to see is what are the prices of GME's contracts in similar situations. So if we add options, I would argue, based off what I just told you about the 700%, that whatever the at the money extrinsic value is going to be the minimum value of what our AMC $40 contract is right now when it hits to at the money. So let's see what that is. If we go to 180, January 2023, $10,450 a contract. So right now, the $40 contract on January 2023 for AMC is worth $230. When AMC hits $40, there's no way it'll be worth less than $10,450. Like, I will stake my life on it right now. $10,450 is the minimum balance it will be. But if you guys just look at the 950 strikes to get your own like confidence, look at this, it's $3,600. So no matter what, that AMC is going to make at least 10x on its money. That $40 strike is at least going to turn into $3,600, right? Like this GME one, if it's $360 and it's 300% out of the money, and our AMC is $240 and it's 300% out of the money, just like try to use your noggin on this one. Basically, whatever you make in AMC is going to make 10 times as much as you would make in this GME. Okay. So you have 10 times more profitability in the AMC 300% option than the GME, because the AMC is priced super, super cheap options, even cheaper than the time where I made 160x on my money, only buying 100% out of the money. But now we're buying 300% out of the money, but we're adding on 2 years of theta. So we don't lose a lot of money when the market doesn't move, but we also make a killing when the market goes up, and we lose about twice as much when the market goes down. So I haven't really gone over this part, but basically if you buy into the January 2023 AMC option, one contract, $250 on average. If you buy into that contract, you can expect this. When AMC hits $20 to $25, you will make 10 to 15x on your money, and you could cash out if you want to. Or you could cash out 1x, which is everything you invested, and let the rest ride. When AMC hits $30 to $35, you will make anywhere from 20 to 70 times on your money. When AMC hits $35 to $45, you are going to make anywhere between 50 to 500x on your money. And I got to be that broad because I don't know how much it's going to be. But what I do know is that if AMC goes up 300%, I am not going to make 300% on my money. I'm going to make at least 50 times on my money. Okay. And if I got $100,000 in there right now, what's 50 times $100,000? That's $5 million. So if my minimum is $5 million, well, now guess what? I'm going to cash out 2.5 million of that. The other 2.5 million, I'm going to have 1.25 million and another 1.25 million. And I'm going to gun market order GME with 1.25 million and AMC. And I'm going to announce when I'm doing that, because obviously I live stream everything I do. And there's a lot of apes that say they like that idea and they want to do it with me. And they call in and they say they're going to do it at the same time. Last Friday, I had to leave the stream early, and right before I left the stream, a guy who comes into the chat who's been coming in for a couple of days saying that he made $15 million off crypto and that he likes my research. And we were watching the volume on the open interest on the strikes that I'm telling people about. And he says, and we've watched the volume skyrocket. And then all of a sudden he comes in the chat and he says, I just dropped $800,000. And it was literally $800,000 that got dropped into it. Like, we saw it happen in real time. It was the most epic thing you guys would ever see. So like, there's people with real money in their pocket that are listening to my research and really liking what they have to hear, or what I have to say. And so let me go on to the next part. So now we're going to talk about AMC and we're going to talk about volume. So we're going to go to the charts here. We're going to go to studies. We're going to go to volume. Oh, sorry. I was actually doing that online. So if you don't have a brokerage account, you can still do it on barchart.com. You just got to type in AMC. So here we have the stock, and then here we have the volume. And right now it is based on a 6-month chart. Okay. So it's based on the 6-month chart of AMC. So check out the first thing we're going to do is we're going to look at the volume. So what I like to do when I look at this chart, hang on, I need to drink some water. Feel my mouth getting dry. Oh, man. So what I like to do when I look at this chart is I like to come basically, I like to look at this red bar that my arrow's on right now. And I like to say everything to the right of it washes each other out. Equal amount of red and green. Then I like to come over here and I like to say everything to this red bar and to the left of it is equal amount of red and green. And so basically there's obviously more green to the left of this than there is red. If you look over here, this is probably when DFV bought in, or Ryan Cohen bought in over here, actually. DFV bought options, so you wouldn't see it on this chart. But basically, I only want to count this bar, this bar, this bar, and this bar, and assume everything else washes out and count the volume. So this bar right here is 1.25. And if it's green, it's buying power. If it's red, it's selling power. So this is 1.25 billion buying power. This is 500 million buying power. This is 500 million buying power. So we're at basically $2.5 billion that have been bought into AMC that hasn't been sold. Now, that's one thing for me to say it and one thing for me to show a bar chart on it. But like, can I actually prove that? And I'll say to you, yes, I can. So if we go to the AMC earnings call 2 weeks ago, the CEO got on the call and this is what he says. He says, good news, everybody. We just paid off $600 million of debt at $13.50 a share, while the share was currently at $10. And that means we paid it off at 25% premium because we want to pay off our debt. We still have $1.2 billion in the bank. The only money that are on our books that say it's bad money is the COVID relief situation. And so we're good to go because we've worked out with all of our people, and we expect to be 95% open by the end of March. And so they basically said they survived COVID and they ain't going bankrupt. And then what they said is Wanda used to be, so check this out. We're going to move back from the 6-month chart and we're going to move to the 5-year chart. Back in 2015, AMC was at a $37 a share price. Okay. So, or maybe $35 a share back in 2015. Well, guess what? We're looking at its lowest it's ever really been. So when it popped up to 20, that was really only halfway. Like that's its normal stock price. It should have been at 20 this whole time. Like AMC, GME, there was probably 10, 15, maybe even 1,000 companies that fit their metrics. Okay. They got to be big enough companies that have options. Then other than that, that's really the only requirement. But then the only other requirement is when the Fed did all the quantitative easing and they got all the stimulus money and they propped up the market, they left a couple companies for dead that still had options on them. AMC is one of them. GME is one of them. I personally knew about Red Robin 8 months ago. Red Robin was at $5 8 months ago. They're at $37 right now. That's 800% ROI, and nobody's putting volume in that. Like it's literally, they're just not allowed to, like Red Robin used to be at $70 a share. When I saw it at $5 a share, I was just like, dang, Nicole, I wish we had money right now. Like that is the easiest win I've ever seen. We go to Red Robin one time a month, every month, and there's always people there. They're not going bankrupt. They're a great company. Like, oh man. So COVID basically crushed a bunch of companies. The Fed didn't help these companies out. And so it created this mega opportunity where the options are ungodly cheap and they make impossible profit if impossible returns happen, which have never been seen before. And the only reason they're being seen now is because, again, COVID killed it. It took out all the volume. And then when the Fed didn't save these few companies, that's what created the opportunity. So let's get back to AMC. Like Red Robin's basically halfway through its point where AMC like used to be at 35, right now at 10. Like AMC is the one that's at its lowest point right now from its last high, whether it's 1 year ago or 5 years ago. AMC is the best company I know that's still in the GME experience. The reason why GME was able to work, AMC is still there. And I'll show you guys that by looking at the open interest. AMC literally is the GME, but GME is life. So don't think I'm talking bad about GME because I love GME more than anybody. All right. So we know that on the CEO, so the other thing that the CEO said on the earnings call was that Wanda back in 2015 all the way to January 2021, Wanda owned 30 to 38% of the company, and they had a Class B share with a special right that said, whoa, they had a special deal that said if they have 30% or more ownership of AMC, they get 3 times the voting power. So basically the CEO goes, because the retail Reddit people came in and showed so much support to AMC, Wanda's ownership has been diluted down to 10%, and their 40 million shares are still 40 million shares, but only represent 10% of the entire float of the stock now. And so what that means is we put in that 2.5 billion. There was only 100 million shares. Now there's 500 million shares. Retail owns AMC right now. If the Fed can hold this off I don't think the Fed can hold this off for more than 2 weeks. I think all this happens in the next 2 weeks. And I think, like, honestly, WardenElite, if you watch to the end and you see my plan of attack, like, I truly believe it won't take more than 10,000 people investing just a little bit of money into these $40 strikes before the hedge funds get so scared that they let it go to 20 and they see how many people cash out for a 10X. They let it go to 30. They see how many people cash out for a 50X. They crash the price, and then all of a sudden it goes up to 40, and then that's when I cash out. But if your crowd got like 5% of their volume into this, I'm telling you, this is where you make the real money, and this is where you have the real impact, and this is where you scare the hedge funds. So basically, we know that it's going back up to $35 or $40 in the next 2 years. Now, we don't know that, but if we can assume that diamond-handed apes are going to hold on to the stock, if we can assume that like they're now, like the CEO goes, we're for the first time in a long time, we're an American-owned company. We're no longer going to be looking to Wanda for direction on how to run our business. They went from last year 100 million in subscription revenue, this year to 300 million. They got 5.5 million subscribers on their online streaming platform, just like every other online, like just like Disney Plus and all them. Like AMC has been in it to win it since the beginning. Listen to the CEO. They are not going anywhere. Anyone that thinks they're going somewhere is crazy. They're in it to win it. So this is all the reason why I have an argument why AMC is going to $40. I've already shown you the options logic of why if AMC goes to $40, my $80,000 is going to be worth anywhere from $5 million to $100 million. And regardless what it is, because I have other big donors behind me, when we take our 50% and we cash out our profits and pay our taxes and buy a house and do all the things we've ever wanted to do, the rest of the money, we're going to gun to AMC and GME stock. And here's the thing. I'll get into a little bit of the inflation stuff later, but there's a lot of inflation coming, and I think it's going to come for the next 4 years. And as inflation eats the value of everything on this world, GME and AMC will be the only things that rise faster than the rate of inflation. I truly believe that in my heart. And like, I believe that this is a battle of the people versus the man, and this is freedom versus slavery, and freedom wins. I 100% believe that. And I believe that I have the math that proves of how we finish the nail in the coffin. So ultimately, I wanted to show you that. The other thing that I want to show is, let's go ahead and go over this real quick. Let's go to the 3-month chart. So basically, you can find a video on Wednesday, my Wednesday live stream from last week. I did this video where I talk about how AMC went up to $20. And then it dropped all the way down to like $5. And then it went all the way up to like $12. And then it dropped all the way down to like $9. Went all the way up to $13, dropped all the way down to $10.50. Went all the way up to $14, dropped all the way down to $12. And then when it dropped this time, it dropped to basically that $10.50 mark. And basically I drew like a trampoline, and no, it was the $9 mark. So basically, so if we look right here, this was the last gain, right? And so I looked at this gain right here, and I looked at this stabilizer right here, and I went from here and I said, this was the last real gain. There was like a little drop right here, but then it gained again, and then it really dropped. And I said, this was the last part where they really were able, like, basically we dropped down here, but then we bought the dip up to here. And when they tried to drop us again, they couldn't. And we were already right here. And so I said, there's no way we're going less than this number, because we've already bought the dip to this point and we can't go lower than this number. I literally drew a trampoline right here when it was like up to here at like $10.50, and I drew it at like $9. It literally comes and touches the trampoline. The next day was Thursday when GME goes up 50%, and I drew a trampoline on him too, and it did the same thing, and AMC went up 22%. So like, I'm a firm believer that every time it dips and we buy that dip, and the next time it goes up, that we now have a new low of what we know that they can crash it to. So if they halt the stock again, basically what reaffirmed my belief in GME more than anything all of this time, and the reason why I bet so much on February 24th and 25th was because of how many times they halted the stock. They halted GME stock like 20 different times because it went up 10 to 20% in like 5 seconds. And they never used to halt stocks because they go up too fast like that. And so this was the first time I've ever seen it, and it just kept happening and happening and happening and happening. And so I just knew it was coming. So basically my new plan is to hold all the way until it hits 40. But if they halt the stock, I know the price is crashing. So if they halt the stock, I'm going to cash out 50% as soon as it opens again. And then once it crashes to my new trampoline level that I'm going to draw, I'm going to throw in that 50%. And I'm going to start like dollar cost averaging every time they halt my stocks. So keep with me, guys. I'm like maybe halfway through probably. Oh man. All right, so this is AMC. I've shown you the volume on AMC. Like, look at this chart. It's 0 billion, 0.5 billion, 1 billion, 1.5 billion. Like, heavy, heavy, heavy volume in AMC. If I go to like Microsoft and I go to their 3-month chart, let's do Microsoft, Apple, and Tesla. And we'll do the 3-month charts, okay? So we know that AMC has 2.5 billion positive buying power in the last 3 months. Let's see what Microsoft does. Okay, so their chart is not in the billions, but it's 0, 20 million, 40 million, 60 million, 80 million. I mean, honestly, I see as much red as I see green. Maybe a couple of these bars are more green than red, but that's only a couple $100 million. And Microsoft is $1 trillion market cap. Right now, AMC is only a $4 billion market cap. Okay, so AMC is only at 10 times earnings right now, where everyone else is at 80 times earnings. So anyone that wants to talk about AMC being a freaking dead cat is completely stupid. Microsoft, let's go to Apple. Oh, AAPL, my bad. AAPL. All right, so Apple, a $2 trillion market cap. No, that's $2 billion market cap. Why does it say that? Market cap is supposed to be number of shares times, market capitalization. Oh, thousands. Yeah, so it's 2 billion because times that by 1,000, it's 2 billion. That makes sense. Or 2 trillion, sorry, 2 trillion. Why did it fuck up my graph? Where's my graph at, guys? This is not what I asked for. I want the technical chart. Okay, AAPL. There we go. So if we look at Apple's volume, we have 0, 50 million, 100 million, 150 million, 200 million. I see more red than I see green in this. I don't know about you guys, but I see more red than I see green. But there is no way there's $2 billion of positive buying pressure in the last 3 months. Zero chance of that. Let's go last one to Tesla, because that's everybody. That's like the Meet Kevin's pride and joy is Tesla. And they say they're betting on the future growth of the company, and they don't care about the 70 earnings, and they don't care if it's going to crash. All they care about the future of the growth of the company. And like Elon Musk is the greatest, but then it's like, why is he invested in all the other companies as well? If it's just about Elon Musk, why is he invested in NIO and all the other stupid smart car crap? So if you look at this, I see way more red than I see green. But again, the bar chart only goes by 0, 50 million, and 100 million. So when AMC is sitting at $1 billion of volume, and that's dollar volume, so that's dollar for dollar matched. More money in the last 3 months has gone in AMC than any other company you can find that has not sold out also. Like if we look at Nokia, originally Nokia was one of the companies I got into. But if you look at Nokia, they had the same amount of volume, but it all sold out. Nobody held on to the Nokia. Watch. They're all paper handers. The Nokia either averaged down and see. So there was all the $1 billion of volume in one, like it was one day or a couple days. There's $1.1 billion of volume. But then look at the next 2 weeks. 600 million is selling, 300 million is selling. Literally almost every dollar that went into Nokia, $1 billion worth, came right out. The price never moved. The price literally, it had one spike up and then spike down, but like, I don't know. It was wild to me. Like that was like Nokia is another one that's like at its bottom that we could squeeze Nokia if we put our options on Nokia, but just nobody's looking at Nokia. If you're in Nokia right now, you need to get your money out of there and you need to get an AMC right now. Like Nokia is a joke. I can prove it to you that the retail is not behind Nokia. Okay. So now that we've talked about AMC, the volume, the company itself, why it's going to $40, how you're going to make all the money with the options on the January 2023, how the January 2023 $40 strike has all the upside as the 3-day to expire option that I bought and made the 160X on, but has way less of the downside. So you can play the next 30 days and only lose 10 to 15% in theta. And so like, January 2023, $40 strike AMC. I feel like I've done a pretty good job on that, guys. Basically what I plan to do is when AMC hits $40, I'm going to cash out the 90%. I'm going to keep the 10% of the contracts. I'm going to keep my 5 GME 2023 contracts. And then when we gun the AMC and the GME stock and GME, like, so basically imagine that we got $100 million that all market orders GME contracts at the same time. If there's a smooth brained ape out there that's trying to sell a contract for $69,420, I'm going to buy that contract. I'm going to fulfill that contract, and I'm going to make every contract worth that much money. Then everybody's going to start trying to sell. And our market orders are still going to be there and try to prop up the price as long as we can until the market starts to crash. And then when the market starts to crash and we've been able to hold up the price there as long as we can, the rest of the world's going to start shoving their money in there. And so every stock that we bought, whether it was for $100 or $1,000 or $69,000, are eventually going to be worth $1 million or $1 billion, because every dollar in the history of the world will end up in GME and AMC, because everyone will be that afraid of inflation. They'll be that afraid of $20 to $100 a gallon per gas, of $20 to $100 for a loaf of bread, of, like, you name it. Like, inflation is coming. The Fed has announced it. And let's go ahead and talk about the Fed for a second. So the Fed has come out about 5 times in the last 30 days or 60 days, however long it's been. I can't really keep track no more. All the days are starting to blur together. But basically, what's happening with the Fed is they first come out, and the first time they come out after, like, Joe Biden has become president, and they say, good news, people, good news. We're the best. We knew it all along, and now we've verified it. We can keep quantitative easing. We can keep printing money, and only good things happen. And we can keep raising the value of stocks, and we can keep everybody's optimism and hope high. And we can keep buying NFTs for $69 million a piece. And we can keep spending money like it does not matter. It will never end, people. That is what the Fed told us. That is what I heard when the Fed was talking. And it, like, made me, like, super angry. But then I'm like, I'm betting against that. When they halt GME, when they halt AMC, and then they come out a week later and they say that, I know I'm going all in on GME and AMC. Okay? So check this out. After they do that, the next stimulus passes, and then they come out again. And guess what they say? They say, so surprise, surprise, we weren't ready for this, but apparently we set off some red flags, and now we will be experiencing inflation, and everyone should be prepared for 2% inflation. 2% inflation does not mean 2% cost added to your goods. 2% inflation means 300% cost added to your goods. Okay? So the next time he comes out, he says, it's one thing to talk about inflation. It's another thing to live it. Everybody needs to prepare to look at their daily cost of goods and expect a price bulge. I don't know what that means. You tell me what that means, okay? I don't know what it means. You tell me. But aside from that, then the next time they come out, the Fed, Jerome Powell is talking with the Europe CBI, like the Central Bank of Europe, and basically talking about creating a one world currency so that they can control all the problems and this economic collapse that we're experiencing. Even though they can't see it, nobody sees an economic collapse because the stock markets that are at all-time highs. But they say, so this collapse can't happen again. And so we can really put our finger on it. We got to make a one world currency. Well, guess what? They're too late. Like, even when they make the one world currency, that doesn't mean the other currencies go away. They just expect everyone to follow in line. So as long as we keep our GME and AMC, the price will continue to go up. We will only lose if we sell out. So basically, like, remember, when I cash my options, 50%, I'm going to cash out and I'm going to spend on whatever I can imagine. The other 50%, after I've lost or spent all my other 50%, I now live out of my AMC and GME. I only sell the stock when I need cash. When I go on a $100,000 vacation, I sell one GME or one AMC. Like, that's it. That's how you got to think about it. It's your new bank account. It's the only thing that will grow as inflation grows. So the next thing that the Fed comes out, and the reason that is it would have been Bitcoin. If you ask me personally, it was going to be Bitcoin, but Bitcoin lost all of its flair when the Fed made AMC and GME the enemy by halting the stock. Okay, so it was like Bitcoin was good. It couldn't be printed more. It was decentralized. It was the rebel child, but it lost all of its flair when the Fed put an enemy for everyone to rally behind. And we are the enemy, but we are the good people and we win. It's like, it's literally like we're the Jedis. Like that's what this is. And you got to feel that way. You got to feel like you deserve it. Because if you don't feel like you deserve it, you're going to cash out too early. Inflation's going to eat you. Like you got to believe in this. You got to believe that like the good people win. That's what you have to believe. So let's keep going. Next time the Fed comes out and basically their only message now is expect inflation for 12 months, but they'll get it under control. Mother effers, I am telling you right now, if somebody's got a problem in their life and they say it's going to take them approximately 12 months to fix their problem, they have no idea how long it's going to take. They have no idea what's going on with their problem, because if they did, it doesn't take 12 months to fix any problem on this planet. It doesn't take 12 months to fix anything. And so the fact that they're saying expect it for 12 months, but then it'll go away, and that it's like, even Kathy Wood said the same freaking thing. They're like, yeah, we expect inflation, but we expect that it'll go away with time goes on. Like people get used to inflation. No, you don't get used to starving. Like, my goodness. Anyways, so oh man, there goes my distraction index. I just lost my train of thought. Kathy Wood was saying something about getting used to inflation. Oh yeah, 12 months. So basically they all think that it's going to be 12 months of inflation and then it's going to go away. But I know that they don't have the answers, and I know that they're just being optimistic, like they're being optimistic, but they don't actually have facts to say that it's going away in 12 months. When I read the Bible, it tells me that this is a 42-month event. And so basically up until Joe Biden finally walks out of the office, or Kamala Harris, depending if Joe Biden makes it that long. I personally don't think he will. I think the over-under is that he will not finish his 4 years, but we'll see. And so inflation for that long is what I expect. And I expect GME and AMC to go up super high during all that process. I know that there's more. Let me see what I have not covered yet, guys, because I know that I have not. Okay, so I haven't talked celebrities, and I haven't talked GME, the beginning of the story, and I haven't talked Michael Burry. Those are like some of the final things that I think I can talk about. I talked about the Federal Reserve. I talked about quantitative easing. I talked about the stimulus and the market crash. So the market is crashing. Everything else is going to crash when inflation hits us. Like GME and AMC will be the only things that don't get eaten by inflation. The gunning of the stock, I talked about that. Okay. I talked about the January 2023 $40 strike because it has heavy theta, but it's still going to make 100 to 1,000x on its money when AMC gets to $40. And that will make us the whales that can gun the GME and AMC common stock. I'll talk about Jim Cramer as well, because he wrote an article about a week ago. And at the end of that article, he talks exactly about doing what my plan has been since the beginning. So he reinforces that plan. So I'm going to talk about this. I'm going to talk about the celebrities, and then I'm going to talk about Michael J. Burry, and that may be it. And then we'll go ahead and we'll bring WardenElite on. And if he has any questions after I've talked about these last couple things, we'll answer his questions. And then I'll go ahead and I'll save this video. I'll upload it into a Dropbox, and then I'll share everybody the link. And then after I get my ban from YouTube lifted, I will post it onto YouTube, but we'll also get it onto the TheGodPillClips on YouTube. So first thing, let's talk about GME, DFV, Ryan Cohen, Conan O'Brien, Michael Burry, Jim Cramer, all the celebrities there, Mark Cuban. We can talk about Jordan Belfort. All of them, right? Actually, no. Before I do this, we got one big thing we got to talk about first. Let's talk about the short interest. The short interest is like the most important thing that I want to talk about, because I feel like there's just so much fake news. And I feel like the fake news is hurting us from getting more volume. Like the diamond handlers are already in and they don't care about the short interest. And they're like, regardless if there is short interest or not, the diamond handlers are holding. And I know this. And so basically, I want to go over the short interest and I want to teach you guys how to understand it perfectly. And so nobody can ever like tell you something that's not true. And you guys can, and then I'll also, so we're going to do the short interest and then we're going to talk about the OTC and the dark pools. So those are the two things that we're going to talk about before we go into GME, DFV, and celebrities. Okay. So I'm excited about this part. So if we go and we watch, we're going to go to AMC, we're going to go to options. And right now we're going to focus on 2023. So basically I'm going to come down here and I'm going to go to the very right and I'm going to see open interest and I'm going to see volume. Okay, so open interest and volume is going to tell you everything you need to know about short interest. Okay, so basically the same hedgies that are shorting the call options are also shorting the puts. Okay, like Melvin Capital just works for Citadel and their job is to short these 5 companies. And if they go broke, Citadel bails them out. Citadel's job is to short the whole market, but hire a bunch of mini hedge funds to short it for them. And they only help out when things get crazy. And then Citadel works for the Federal Reserve. And every time they get money from the stimulus, they give some of it to Citadel and Citadel keeps the options things going. And it's the biggest scam in the world. And basically in their mind, a lot of these strikes are 100% infinity impossible. And the only reason they allow you to buy them is so that they can collect your money. And they know that they will halt the stock before they allow these to make money. Now, because that's true for one person and one situation, it can be stopped by everyone coming together and doubling down and just saying, no, we won't go. So we can still win. Like it doesn't mean like just because they can stop the stock doesn't mean that they win, because long term, every low is a new high. And so a new high for our lows. And so long term, we're like in the next 2 years, AMC will get to $40. You better believe it. And when it does, I will cash out and I will gun the GME and AMC stock. So now that we know that, last thing that I want to say, and so here's what I'm going to do. Last thing I'll say about gunning the stock is when I leave that 10% in there and the 5 contracts on 2023 and I gun the GME and AMC stock and it goes to $100,000 a share, my 5 contracts on GME are going to be worth so much freaking money. I'm going to cash that out and I'm going to gun it again. So like when I told you that we got to maintain that price, like as people are selling, I will continually keep coming in and keep buying and keep buying. Like with whatever monies I'm making on those options, the 10% of options, as it skyrockets to unbelievable prices, I'm going to cash those out and I will keep coming in and keep buying more and more and more from people. Like I want all the stock. I want to own GameStop and I want to own AMC straight up for real. So what I want you to understand is because the hedge funds are shorting both the calls and the puts, they can actually like, so when January 27th and 28th happened, they had a clubhouse meeting, and on the clubhouse meeting, the people on the clubhouse meeting, the people said, how much did we make? How much could we have made? And how much did we lose? And the Robinhood CEO says we lost 30 billion and we could have won 300 million, and they would have lost 100 billion or 300 billion, but they halted the stock and they only allowed selling, which crashed the price, which made everyone in the options just lose fortunes of wealth. So now that we understand that part, so basically what I'm getting at is when you want to calculate the short interest that can be squoze inside of a stock, you can only calculate the puts or the calls because only one of them is going to make money at a time. And so if you're talking about an actual squeeze that happens on a hedge fund, it's got to be only one side. So you can only add the call synthetic shares or the put synthetic shares, depending if you want the company to go up or down. Obviously, if you're in this chat, you only want AMC to go up and you only want GME to go up. So we're only going to count the call shares. And so for every contract of open interest, there is 100 synthetic shares created. For every volume, this is either bought or sold volume. We will not know until tomorrow when this number updates. And so basically this number right here, 5,700 at the bottom for the $40 strike is at 5.7K. If this is all buying volume, then this will be at 6 or 6.1K, depending if this is 5.70K or 5.79K. Does that make sense? And so basically, I can't tell them the volume today, which one's buying and which one's selling, but tomorrow when this number updates, I can tell exactly what number of that 334 was buying versus selling. So we can come through here on January 2023, January 2022, September, June, May, April. All these expirations are the only expirations in the entire AMC universe. We can count all the call open interest, ignore the volume for today, just because it's only one day of volume. And whatever that is, times that by 100. And that gives us the total amount of synthetic shares on the call side that can be squozed at one time. And then we compare that to the number of shares in the stock. But what you got to understand is that the stock went from 100 million shares to 500 million shares. If we get to a 20% short interest and we have 100 million short interest shares, that is a crap ton. It doesn't need to be 500 million shares for 100% short interest to have the same effect as the GameStop. The GameStop had 140% short interest when it was at its bottom dollar, right? Where when it only had 30, 40, let's just say 50 million shares of stock. Before people really bought into it, it had 140% short interest. So let's say there's 50 million shares. That means it only had 75 million synthetic shares. Now, everyone wants to think percentagely, but what you got to understand is the same 75 million short shares on GME versus AMC is going to steal just as much money from the hedgies, but actually more because the AMC options are cheaper than what the GMEs ever were. Well, not ever were. When DFV got in, the GME options were cheaper than the AMC options. But now the AMCs are way cheaper, obviously. So ultimately, what I'm getting at is that the 20% short interest on AMC could be equal to 100% short interest on GME. And you guys need to get over this blocked in your head about what the short interest is, because it's very, very simple. All it is the call option open interest for every strike on every expiration. Add it all up, times it by 100. That is how many synthetic shares are in the market for AMC right now. And you can do the same thing for GME. I already did it for GME and AMC. And basically AMC is at like a 15% short interest, which is just under what GME was forever ago. And then GME right now is at like a 5% short interest because the contracts are so expensive right now, retail can't afford them. I tell people about the GME 2023 950 strike that's $4,000 that I own 5 of, and everyone's like, nope, can't afford that. You got anything cheaper? I'm like, yeah, the AMC one's actually probably going to make more money, and that one is only $240. So that is how you do open interest. I'll let you guys count the open interest yourself and calculate the short interest yourself. Now I want to talk about the OTC and actually one thing I will mention here, if you look right here, I got 374 positions on this for $88,000. There's 5.7K shares, or there's 6,000 shares of open interest. And so that means I have 6,000, or I have 5% of all the contracts at the $40 strike on 2023, which I believe is going to be the most profitable strike in the entire stock market of all time, honestly. And so, I'm way into this, guys. I got my whole life into this. When I cashed out all that money, I kept buying early to expire options, and every Friday I was losing $100,000. And then I found out that the math works. I found out that they think it's impossible for AMC to go to $40 in one day, but they also think it's impossible for AMC to go to $40 in 2 years. And so I'm throwing all my money on the 2 years, and the more money we throw in the 2023 expiration for AMC or GME, the more scared the hedge funds get, because they can't fight a 2-year battle. And we still profit 100 to 1,000x. So why wouldn't we bet on the 2023? And so they can't fight a 2-year battle right now. So last Friday on AMC, there was 200,000. So check this out. I counted the open interest on Friday. Okay. There was 1 million contracts of open interest on the calls for AMC. So that's 100 million. So that puts the open interest, or the short interest on AMC, at 20%. But guess what? 200,000 of those contracts expired on Friday. So it dropped to 800,000. So now it's 80 million, and 80 million of 500 million is now something like 15% short interest. Okay. So everyone keeps betting on this Friday, and all you guys are making them do is have to fight for 5 days in order to take all of your money, and then they can add that to their wealth to where they don't get margin called as long as they got enough money in their bank account. The margin call is not something where they got to go look at the bank account it is always, it's a robot that's reading it. The bank doesn't call the money. The algos call the money. The margin call is an automatic process. It's not somebody watching and saying, I don't feel good about this. No, it's you don't have enough money in your account. It's time to close your position. You don't get a chance to win your money back. Goodbye. You lose. Game over. Like, that's what happens when you get a margin call. They're telling you lost. And like, if you want to get back in, you got to bring in more money. So that's the short interest. That's the margin call. Let's talk about the OTC and the dark pools. So there's a guy named Josh on Twitter that brought up the Citadel facts that they on the OTC or the dark pool traded 1 billion AMC shares in 3 million trades. So if you guys add that up, that means the average trade was 3,000 shares. If you times that by the $10 stock price, that means the average Citadel trade is $30,000. Well, I'm going to tell you right now, I am deep into the hedge funds and the quants. I talk to all of them, and the only thing they care about is price prediction analysis. And so basically what they're all working on is when you send in an order to the stock, they can look at what the stock price is, how it got there, and then they can look at your order and they know where the price is going to go. And so before your order even fills, their computer has already sent another order to counterbalance your order if they don't like it, or they sent another order to close out for the profit if they finally hit their profit. Like, they're looking at the extreme detail of what everybody else is doing and where it's going to send the price. And ultimately, they found a way on the dark pools to trade money. So if they're trading 3,000 shares per average trade, what they're doing is they're buying 2,000 shares at one time. They're selling 1,000 shares through 10 different trades, and it washes. And basically, they do this over and over and over in small little trades. So the price of AMC doesn't move. And then all of a sudden, they've collected 100 million AMC shares. And now for the next 3 days, we got to feel a 35% drop because they already dropped us to our absolute bottom. Now they're letting us grow again, and we buy the dip a little bit, and now we have a new low that we'll see next time. But they let it grow as they collect all these shares, and then boom. They crush the stock price and they sell all the volume in 3 days and crush us 35% in 3 days until we hit that new low that they can't crush us below because we hit that trampoline, because we bounce off all of our pressure that we've already created. And then we get to a new high, and then a new high, and then a new high. And 3 months from now, at the worst, we'll be at $40 for AMC. I'll be cashing out $100 million, and I'll be gunning that stock. And every ape that's just holding stock right now, if they're selling for $69,000 a share, I'm going to buy it. All right, so I'm going to make the celebrity part. Like, that's all I got to say. OTC, short interest, whatever. Like, anyone that tries to argue with me on this stuff, like, I just don't think they're being genuine because my math checks out. Like, my math is about the data, and everybody else's. Like, when I look at other people's short interest data, their open interest doesn't match what I see on E-Trade. And I believe E-Trade is accurate and not the other people. So, because E-Trade updates every day and it updates perfectly from my perspective. So the last thing I'm going to go over is Conan O'Brien is a celebrity comedian. He's probably not nearly as big as now as he was 20 years ago. But his Twitter says the voice of the people. And when DFV doubled down, when GME got dropped from $483 to $38, that's when Conan O'Brien said, I just did a thing. I bought into GameStop. Wish me luck, everyone. So instantly, I know that his kids told him what's up because he always talks about his kids on his Twitter telling him stuff. And I know that he's a genuinely decent people because his kids told him this is the people's movement. And he said, I'm the people, like I'm the voice of the people. So he said, I have to invest in this. I got to put my money where my mouth is. He said, I can't be the voice of the people and not be part of this. So if you guys if you guys like that kind of confirmation, I got plenty of that. Michael J. Burry, he's basically was invested in GameStop before DFV, who is also named as Roaring Kitty, who's also named as Keith Gill. And basically Keith Gill is like, he was researching GameStop like crazy and found the opportunity, saw that other people were invested, Ryan Cohen, all this other stuff. So he buys a bunch, $50,000 into options, probably bought some stock too. I didn't follow like early on. But basically he just totally, like, everything I'm doing on YouTube right now in this video, he's doing about GameStop and GameStop only, back when it's at $5 a share. And he gets thousands of people to listen and invest and all this stuff. And it explodes like it's supposed to, because it's at its bottom and it can't go any lower. And when something can't go any lower, what does it do? It goes up. And so he makes a fortune. Then now everyone knows about it. Now everyone starts rushing the thing. And that's when we get back to January, basically. Ryan Cohen was the founder of Chewy, a dog food company, pet food, really, pet everything, really. And they're the #1 animal food supply company in the country. And Ryan Cohen was like, he had a huge plan of attack where they spent a ton of money on customer acquisition, but now they make bank and they're $1 billion company. And he took a lot of those profits and he bought into GME. And now he says he wants to do the same thing for GameStop. Everything about it seems super legit. He came into my chat 2 days ago and said a couple, like, just like posted like pictures, kind of like his Twitter. And so I don't know what to think about that. Maybe it was a troll and it's not really him, but I kind of got a feeling it was him because he didn't say anything. Like, if it was a troll and he wanted to act like he was going to give me $1 million, like, I would have got all excited and like he could have made me look like a fool or something, right? Like, why wouldn't he troll me? But I don't know. That was pretty exciting. Ryan Cohen, every time he tweets, like a week later, GME exploded. And that's not as consistent this last 30 days. But before that, like, it was, if he tweeted 3 days later, it went up 100% in one day. It was crazy. And it did it like multiple times in a row. Like, his ice cream cone was something that I turned that 3,000 into 500,000. So I'm very transparent. I'll answer any question. Like, typically on my YouTube, I have a phone number above my head and you're allowed to call into my show, ask questions, give your own opinion, as long as I don't feel like your opinion is a bad opinion. And like you're hurting the cause. Cause I feel like anytime someone's trying to help the cause, but they give fake DD, that the smart person sees that it's fake and it makes them not invest. And I'm trying to reach out to the heavy investors. I want the heavy hitters. So I'm only sticking to the facts. I'm only sticking to the things I can prove. And there's a lot of stuff I can prove. And I hope you guys enjoyed the show so far. One thing, so other celebrities of note, Jim Cramer hates GameStop, keeps telling people it's overvalued and they need to sell. Everybody basically hates Jim Cramer. Reddit basically was at 2 million people when I logged in February 1st. It grew the next week to 8 million people. When it was 2 million people, everybody was all about GameStop and AMC. Maybe they were talking about Nokia and a little bit of stuff, but that changed to AMC and GameStop only really quick. But basically, Reddit was united with 2 million people. And then when the 8 million people got in there, you could tell the hedgies took over and you could tell that they just totally changed the whole vibe. And for 2 weeks, we were just crashing in price and everyone was making fun of GME and AMC, making us look like we were alone. But then all of a sudden, the diamond handlers never sold. The price skyrockets. And now even Reddit is back on our side. Even Wall Street Bets is saying, oh, the squeeze is back on the menu, boys. Like, they used to be so negative, GME and AMC, like they're still pretty negative. Like, I'm not happy with any of it really. All the Reddit pages kind of bother me just because I see a lot of fake information and I see a lot of like all the this isn't financial advice stuff. That's kind of shill talk to me. Like, I get why the people giving the advice would say it and I got nothing wrong with that. But the people telling me, advising me to say that to protect myself, don't worry about me. I'm good, bro. Like, don't worry about me. I say it often enough. I can go through my videos. Like, if somebody watches 1 minute of my video and then say they invested their entire life fortune because they didn't go back and watch 8 hours of at least one full video, I'm not worried about that lawsuit. Let that motherfucker come for me. I got it. Like, I'm good. Don't worry about me. I don't need to tell people this isn't financial advice because I'm not giving advice. I'm just showing you what I freaking know and what I've proven to be true. So I'll show you a couple things. I'm not going to go into too much detail. Like, this thing is something that I've been working on for a long time. Pricing.raystocks.com. It's an open site anyone can go to. Raystocks.com. If you go to this URL right here, you can go click on SPY. You can click on a call. Not everything works in this perfectly, but if you click on like 100 hours to expiration, You can come down here, click on if you want to search it by IV or VIX. Go ahead and do IV. You'll get just one thing will pop up for a 0 right here. If you click on this guy, it takes a minute the first time. Then you go to 0. This goes pretty quick. Let's go. Normally don't take this long. Come on. There we go. I'm going to hit show all prices, and then I'm going to hit all. Then if I come down here and I go to diff percent from strike, basically I've created a URL that shows you how to price what the ask or bid price will be based on the IV or the VIX, based on the amount of hours till the option has to expire, based on the percent difference between the strike price and the stock price out of the money. And all the stuff that I work on is only based off out of the money options, just because intrinsic value is so simple. I will show you guys intrinsic value one time. So if we go over the intrinsic value, basically what you guys got to understand about an option and intrinsic value is this is an example of the option pricing of the S&P 500 when the SPY was at 323. Basically, I gave you an example of if the SPY goes up 1% by expiration, then the price would be at 326.23. If you would have bought the $324 strike for $270, your 326.23 closing price is exactly $223 above the 324. So you subtract the 270 cost minus your $223 in gains, and you lose $47. So what this shows is that if the market's only going to go up 1% from the current option pricing metrics, that every strike will lose money and you should not buy an option. If you think it's going to go up 2%, now it shows the 325 strike actually makes $227 and only costs $219, which is a net ROI of 104%. So your best dollar return is on the strike 325. If the strike goes up 5% at close, this is just intrinsic value, guys. This is assuming you have no extrinsic value. So this has nothing to do with my plan. This is just to help you understand how options work and how the intrinsic value works. So if the option goes up 5%, what's 5%? And on top of 323, you get something like 15, 18 bucks, 17 bucks, we'll say. So it's like 340, 350 is the price. And we'll see that the number one profitable strike is the 336 strike for $8 a contract. Each $8 contract you buy is worth $307. So if you would have bought the 324 strike, your $276 would have grown to $1,245 for a 461% ROI. But if instead you would have bought 33 contracts for $8 a piece, so to equal the $276 investment, then you would have made $10,361, which is a net ROI of 3,837% per dollar invested, 38 times on your money, just by seeing the S&P 500 go up 5% based off when the option prices cost this much. So I'm not telling you this was a good opportunity or not. I just want to show you how the actual math works of intrinsic value. With that said, is there anything else? Michael J. Burry is the last thing that I'll touch on. Oh, actually, we'll do Vanguard and then Michael J. Burry. Basically, Vanguard on January 28th and 29th said, drown out the noise, and all the noise was GME, AMC bad, and it says stay the course. And then it said it again 2 weeks ago when it finally started to come back up. And then they basically are just, every tweet, it seems like they're just warning people about a financial collapse and how to prepare for it. So I really like Vanguard. I think they are legit. And then the last thing I'll talk about is Michael J. Burry. So he's been invested in GameStop for a long time. Supposedly he cashed out. I don't know if that's true or not, but it doesn't matter. But Michael J. Burry, what do I want to talk about him? What I want to say about Michael J. Burry is that he basically for the last 3 months has been tweeting stuff, and then he deletes it the second that he tweets it, like an hour or 24 hours later. And so I've been screenshotting a lot of Michael J. Burry stuff, and I have a Dropbox with all the saved screenshots that I had. But basically on the day on the February 24th that I turned my 3,000 into 500,000, Michael J. Burry the night before posted an Excel page similar to this one, but these numbers were like saying $7,000 and then all of a sudden would flip like they're in live action and it would change to $7 million and then $300 million. And it's like someone's either making or losing a lot of money, right? And I knew that only numbers that can move like that is options. And so that's like I knew Wednesday was going to pop, and Michael J. Burry told me, and for him to be so smart and to know about it and to like all he does is talk about ending the Fed, ending the Democrats, like control on the education system, ending the stimulus and the money printing, ending all the bull crap. But the fact that he's smart enough to know that the options were going to pop 12 hours before they popped, and he could have made $1 trillion off that with his $100 million, that tells me that Michael J. Burry is one of the smartest people on the planet, and I need to be working with him when I do start my bank, and me and him will be great friends. That is the last thing I got to say. I hope WardenElite is still on the phone, because if he is, he will now have a chance to tell us what he thinks about what I had to say and ask any questions.
Yeah, sure. So I think that you definitely put a lot of good time into this, DD. I get what you're doing with picking, further strike dates to avoid having to deal with theta problems, because, pick something too early, you might have timed it wrong, or the theta eats into the premium of your options. So sure, I think that makes a lot of sense. Based on your facts and evidence, if the bet you're making, which is supported by a lot of evidence, ends up coming true, then yes, the returns are going to be potentially very, very high. Of course, I think everybody should remember that these are bets in the options market. A lot of plays are bets. I made bets. I'm making a bet on GME. So just keep that in mind. And in terms of the question, I think it makes sense to me. Yeah. Do you have any particular questions you want to ask me?
No, man. If you like it, like if you could give me a shout out on your channel and tell people that, like, if they're interested in options and they're not just like comfortable with the stocks and they want to make a little bit more aggressive, like tell them I got a good plan and that like I might be someone worth checking out.
Sure. Happy to shout out your channel on my next stream.
I'd appreciate that, man. You rock. I appreciate you coming on and taking the time. I really do.
Yep, no problem. I got to hop to a meeting.
All right, brother.
It was great being on. Thank you so much.
Bye.